Hi everyone! Today I'm going to show you the top 5 strategies that are really popular among traders and are used every day in binary options. You know, there are thousands of different methods in trading, but these 5 are the real foundation. They work on any asset and any time frame. The main thing is to understand the logic behind them. And let me say right away, there won't be any magic buttons here. These are truly effective approaches that are used by both beginners and pros alike. So make sure to watch until the end, because we'll go over not just the principles, but also various tips you should pay attention to in order to avoid falling into market traps. The first strategy is trading from support and resistance levels. This is a real classic that almost everyone starts with, and it's still relevant even for professionals. The meaning is simple. The price always reacts to certain zones, either reversing or breaking through them with a strong impulse. These zones are called levels. How to trade. On the chart, we mark horizontal lines where the price has stopped or reversed several times in the past. These are the strong levels. The price has approached support, most often there will be a rebound upward. We take it for purchase. If it approaches resistance, there will be a bounce downward and we go for a sell. The thing is, there are always a lot of participants at strong levels. Some are taking profits, others are opening new positions, and that's why the price often reacts. Here, it's important not to enter randomly, but to wait for confirmation. For example, a candlestick forms a reversal pattern and volume appears. And yes, you can work not only on the bounce. If you see that a candlestick has powerfully broken through the level and consolidated above or below, you can trade the breakout in the direction of the move. The main thing is to wait for the candlesticks to close, otherwise it's easy to get caught in a false breakout. The second strategy is price action. This is trading based on candlestick patterns without unnecessary indicators. Here we learn to read the chart itself, price behavior, candlestick structure, and levels. Let's look at an example. A pin bar is a candlestick with a long tail, which often indicates a reversal. An engulfing pattern, when a new candlestick completely covers the previous one, is also a signal for a change in direction. There is also the inside bar and doji. There are many of them, but it's better to start with the basics. The key feature of price action is that it allows you to enter a trade at the very beginning of a move, when indicators are still silent. This is a huge advantage. But there are nuances. You need practice. Simply spotting a pin bar is not enough. You need to understand where it appears. If a pattern forms at a strong level, that's a very good signal. If it's in the middle of a flat, it's just noise. The third strategy involves working with the RSI indicator. This is one of the most popular indicators, and for good reason, it really helps to spot market reversals. The idea is simple. The RSI indicator shows us overbought or oversold conditions. If its line rises above the 70 level, the market is overheated. We wait for a reversal downward and take a sell position. If it drops below 30, the market is oversold. We wait for a reversal upward and take a buy position. This strategy works especially well in a sideways market, when the price moves within a range. There, the market is constantly becoming overbought and oversold, and the RSI shows us this perfectly. But if you get caught in a strong trend, be careful, because the price can keep moving in one direction for a long time, and the indicator may stay stuck in the 70 or 30 zone. Tip: always filter RSI signals using support and resistance levels or price action. For example, if our indicator shows overbought conditions and at the same time the price has hit a strong resistance, the probability of a reversal is much higher. The fourth strategy is the moving average crossover. These are indicators that smooth out price movements and show the overall trend. So how do you trade with them? Place 2 moving averages on the chart, one fast, for example MA10, and one slow, MA50. As soon as the fast one crosses the slow one from below upwards, that's a buy signal. If it crosses from above downwards, that's a sell signal. This strategy works very well in trending markets, when there is a clear direction. But in a sideways market, the crossovers will be constant and false. To avoid this, you can add a certain filter. For example, only trade if the price has been above both moving averages and the crossover is in the direction of the trend. Another option, you can combine moving averages with a strategy based on levels or RSI. This will help filter out unnecessary entries. And the fifth strategy is breakout trading, or trading on the exit from a range. The point is that the price can't stay in one place forever. If there's been sideways movement for a long time and suddenly a candle powerfully breaks through the boundary of the flat, that's a signal for a strong impulse. So what should we do? First, we mark the boundaries of the range. When the price breaks the level and the candle closes beyond it, we enter a trade in the direction of the breakout. Very often, after a breakout, the market covers a good distance, and you can profit from that. But be very careful. False breakouts are common. That's when the price shoots past the level by a few points and immediately returns back. To avoid getting caught, it's better to wait for confirmation. For example, the candle closes beyond the breakout, or after the breakout, the price retests the level and then moves again in our desired direction. So that's our top 5 strategies that traders actually use every day. These approaches work on any asset and any time frame. The main thing is not to jump from one to another, but to choose 1 or 2 for yourself and practice them until they become second nature. Also, let us know in the comments which strategy you use most often: levels, patterns, indicators, or breakouts. And of course, subscribe so you don't miss the next breakdowns. There's a lot of interesting and useful content ahead. Trade wisely and see you in the next video.